Kirti Vadagais, CFO of Suzlon, joins us now. Kirti, good morning. Thank you for joining us. Kirti, the company has just completed with the CDR process. Give us more details on the CDR package.
So far as CDR things are concerned, basically, as you are aware that this is a mechanism for a viable company in India who are passing through temporary cash flow mismatch. So this is a good scheme within the regulatory framework of India. We have already given entire details of CDR scheme by a public announcement, but let me brief you that it is giving us about 10-year door-to-door maturity on our term liabilities with 2-year moratorium on interest and principal, giving concessional rate of interest, additional facilities for working capital of about $350 million, and the interest converted into loan and that loan converted into equity. These are the major features of our CDR scheme.
Right, and what are the conditions put forth by the banks for the CDR?
Yeah, it is a standard condition which is common for every CDR package. You might be aware that promoter need to bring in certain percentage as a capital. So in our case, my promoters are required to bring in about 250 crore as a capital in 2 tranches, 125 crore in short time and 125 crore in next 12 months.
Kirti, what is the game plan in terms of repaying the debts now? Your competitors, Games and Vestas, have already downgraded their guidance due to slow demand outlook.
First of all, let me tell you that the fundamentals of wind energy in a long term is very, very good. The cost of generation of energy from wind is coming down significantly due to technology, thanks to technology, and we have a strong order backlog. So our focus, once we complete the liability management this year, is going to be on execution, and we have a large non-critical asset block which we have already identified. So we will continue to have focus on generating cash from sale of non-critical assets. Our business will be on track from next year onward. The question is mainly, as I said, execution, because our order backlog is very, very sound at $6.8 billion. You must have seen that we have already announced roughly about 500 megawatt plus order in last 1 week.
Right, you said you have blocks of assets. Can you give us more details?
Yeah, there are certain component manufacturing units, certain offices and all those things. So there are many assets which we can sell off. There are few factory premises.
Kirti, what is the update on the discussions with the bondholders for the FCCB which on which Suzlon had defaulted?
So far as FCCB is concerned, our discussion with bondholders are quite good and progressive, I would say. Directionally we are going on a positive direction for solution oriented. So far as specifics of the solution is concerned, probably we need to wait for some more time, but the discussions with almost many bondholders are going in the right direction.
And what's the update on the funds that will be received from the sale of the China facilities and also payments of Edison mission?
So far as China things are concerned, we are a bit delayed due to certain administrative reasons, and we are hopeful that we should be in a position to complete the same within next 3 months. And so far as Edison mission is concerned, it is a sub judice matter, so I would not go into the specifics of that, but as I already mentioned earlier that receivables from Edison mission are fully secured by asset block which is having larger value than what I need to recover from them, and we have gone for a legal process to secure our stakeholders' interest.
Okay, RE Power has sufficient cash on the books, and post taking over the control of the company, it was assumed that the cash will be used from RE Power to retire the debt. That was not done. Any reason?
First of all, RE Power is a cash-rich company. Definitely, the cash is fungible, so it can move day-to-day basis. So, if you take the last 31st March balance sheet of RE Power, the cash sitting on RE Power balance sheet was north of about 270 million euro in March 2012. So far as utilization or deployment of that cash is concerned, RE Power business is growing at a very, very fast pace. And that is why we have preferred to use RE Power cash primarily to fund the growth of RE Power.
And what about RE Power? Any plans to sell stake, as the street believes? It would be easier for you to raise more funds doing that?
Yes, it's a good question. In fact, every week I read the news that RE Power is being sold by somebody. In fact, I should be doing that and somebody else is doing that. So that's a good thing. But as we repeatedly said as a group that RE Power is well in the crown. It is the strongest acquisition we had. We have grown that company by 5x in revenue and 10x in profitability. So it is well in the crown and it is not for sale.
Kirti, what about the promoter holding, and how is the promoter holding going to bring down pledge, as investors don't like companies with high pledge levels?
Okay, two things here I will guide. First of all, I will not be able to speak on behalf of promoters that what is their plan to bring down the pledge. Secondly, the pledge which you are talking about, the major portion of the pledge is for the borrowing made by the company. So promoters have been kind enough to offer their own shares as a security for borrowing by the company. And so those pledges are not linked to any mark to market. That fact is not very well known in the market.
And what's the update on the order book, and where do you see demand coming from now?
See, first of all, on order backlog, we have already given a fixed number at the time of our last quarterly earnings, that as a group we have 6.8 billion order backlog. Thereafter we have executed certain orders which need to be deducted, plus we have announced certain orders. Like Canada, we have announced 350 megawatt order, which is one of the largest. In South Africa, we have announced 139 megawatt, which is the largest order in South Africa, big order. In India, we have announced two orders about 75 megawatts. So across the market where we are strong, we are seeing the traction so far as order backlog is concerned.
Kirti, any funds from the CDR to be used for retiring the FCCBs?
We have factored a solution for CDR, solution for bondholders in CDR. Now, what is that solution? I will not go into the specifics, whether it is X amount or Y amount. We will not go into specifics of it.
Right, and how do you see FY14 panning out for Suzlon?
See, first of all, as I told to you earlier, that we have a strong order, so our focus is going to be execution. Secondly, the company has been very well supported by all stakeholders, so I must appreciate the cooperation, patience and support by all stakeholders to the company in a difficult time. And next year our focus is going to be execution of strong order backlog. I will not give any guidance because it is against our policy to give guidance on the selective basis.
Okay, we'll leave it at that. Really appreciate you taking the time out and chatting with us.